Hey, this is the Prophet with Nate Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket. By any means I rock. This is the Prophet with Nate Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet. Hey, hey, you talking to the Prophet.
Very interesting. Let's see, what should we put? Should we have some intro music? Mayhaps? All right. Let's see what's going on. Let me get the microphone. Look at this big old thing. Just floats over here like a little planetoid. Who do we have? We got, okay, Todd B, Joe Fernandez, ¿Qué onda? Bam, Cassandra, Jerry, Pura Vida. We have Ella Paul, Bitcoin Candy, Johnny Midas was from West Hollywood. Man, you're everywhere. Dab Life 420, STMX to the moon coming, maybe. I hope so. I like the idea of gamified debit cards and stuff and that kind of stuff. And I have a little bag, and I've been waiting and waiting. Suze, Mark Klein, good to see you. And S2K Hobo, also good to see you. Just another, yep. We've got Solid Gold, Joe Pirate, V Rulo over on the Thetas. So yeah. This is Crypto Corbin just, oh, okay, got it. Rightio, so rightio. Yeah, sometimes Theta can be shaky. It is what it is. So hello, everybody. We will get this thing going. Throw a couple likes on there. Throw a couple likes for a brother. Scorbzion, good to see you. We will get this thing started here. We'll just do some quick price action. We'll go look at Cointelegraph Pro. There's one coin that's popped up above 90. First time in a few weeks that we've seen something really pop up in the Vortex scores. And it's been kind of in the news, in and out of the news lately. And so we will look at that. It's not one that I follow. It's not even one that I own. Sometimes they are, sometimes they aren't. So we'll talk about that. We'll talk about cognitive bias. Just, this and that's. I have a cool article I found. We'll go over that. The fun stuff. And we'll just go from there. And let me see. Drexari, good to see you as well. All right. We shall return right after these non-commercial breaks. Okay. I put an article up because I thought it was interesting. We're going to take a look at it in a second. There were actually two. Let me bump this one up. You know what? Let's see if we get to that. We won't just jump to that one right now. We'll see if we get to it. But I found a couple of cool articles. One about the illiquid supply of Bitcoin. And we've been talking about this for quite a while, in that Bitcoin is essentially illiquid at this point, in that most of the Bitcoin is in private wallets pulled off of exchanges. not in the hands of sketchy, low rent investors like you and I. Joe Sixpack is not controlling Bitcoin. Institutions, banks now to an extent are controlling Bitcoin. And I say controlling, they're not controlling the price because actually it's Joe Sixpack that controls the price. We create price discovery, right? And more markets mean more price discovery, which is a better mechanism for the old school market information hypothesis, whereby all of the information is readily available and it's always priced in all the time. I don't know if that's true. I think there's some mechanical functions of markets that create dislocations in pricing that have nothing to do with information. Maybe it has to do with the information about how these tools work, but there are some gears and cogs in the machine that create some price disparities. That being said, more markets is better. But at a certain point, if you democratize everything, then you have the mass ruling. You know, what is it? Pure democracy is two wolves and a lamb voting on lunch. You don't always get what you want. So let's just, keep in mind that most of the Bitcoin, it's 14 and change million is poof, gone off of exchanges. 14 million is gone out of supply. Just let's look at the numbers. There's 21 total million. About 4 to 6 million have been lost. Some of those will be recovered, I'm sure, but some of those will never be recovered. So if there's 14, so let's do some math. If there's 14 million off exchanges and from 4 to 6 has been lost, then there's only between 1 and 3 million Bitcoin available in all of the exchanges on all of the planet human. Does that make sense? So we're not moving a lot of Bitcoin. We're moving a very small amount of Bitcoin, and the price is bouncing around like a meth addict's EKG. So keep that in mind. When you see a lot of these price movements, you're getting a fair read on price, but not an indicative read because most of the supply has been stashed. Okay, and let's go ahead and hit Scorpio on what's going on. Let's see. Hypothetical, if all those BTC go back to the exchanges, wouldn't that cause the price to drop? No, well, people might assume if all Bitcoin came back, oh my God, they're selling. So there could be a psychological effect there. But simply putting the Bitcoin back on exchanges, it actually would ameliorate price drops unless people started selling. And the reason being is you would have more Bitcoin, meaning every buy and sell would have less impact on the market. On an illiquid asset, if you have 20, reduce it to the small. If you have 21 Bitcoin and 20 of them are locked up and there's only one Bitcoin, then every time that Bitcoin or a portion of it sells to somebody, that last price multiplied times the entire market cap, which is all 21 Bitcoin in this example, creates the market cap, even though it's only one Bitcoin or a portion of one Bitcoin trading, right? So you guys see how it's amplified. It's essentially amplified 21 times. It has 21 times the price movement effect. So just kind of remember, a less liquid asset, the vacillations are going to be bigger, right? If you dumped all those Bitcoin onto an exchange, you would actually create more liquidity, and each little sell and buy would have a less and less effect because you wouldn't be going so deep into the buy or sell orders, into the order books. Does that make sense? Because instead of one Bitcoin representing 100% of the available, it would represent only 4.8% or 4.9%, whatever, of the entire supply. So you get these weird effects when an asset is illiquid. Anyway, okay, I'm pretty sure we beat that. We beat that horse done dead. Lori, good to see you. And Brady, good to see you. Michael, good to see you. Brandon, what up? We just had some coffee. Me and the Brando. Adam, what's going on? Biotech Breakout, good to see you. YOLO Buck, sup? Okay, so let's keep it going. let's take a look at prices. Let's go down the list. The Bitcoin has sold off a little bit, but it had a good week. It had a good week last week, had a great weekend, 38.2. It's still up on the week. It's still up on the 30, just way up on the 30-day, 8% on the 30-day, and on the 1 year, 236%. That's nothing to besmirch. That's still really good movement. Expat Matt, good to see you. Jasnock, Gordon Bennett, Spirella, good to see all of you. Okay, so let's not, Bitcoin is not dead again. But like Brandon and I were saying this morning, I didn't get the fourth call. You guys know what that means. We're not out of the woods yet. I didn't get 4 calls from intelligent investors that were panicking. I got 3, but I didn't get call number 4. I'm worried. I am a little worried. So there could be more pain in the Bitcoin. Ethereum's down a little bit. It's down 5%. Look, Ethereum moves up fast. Ethereum moves down fast. JR, good to see you. We're at 2,500. Listen, there's non-fungible tokens are gathering steam again. They're getting exciting again. People are buying artwork again. That's weird. Jerry, I got a call. That's funny. I got a call from Jerry Hall from Santa Rosa, but I'm guessing it's not Jerry. It's another Jerry, an evil Jerry. Anyway, okay. Ethereum, 2,500 flat. It's down 5% on the day. It's up 10 on the week, up 7 on the month, up 539% on the years. That's not bad. The Cardano starting to buck the trend. Well, this is interesting because Cardano's been bucking the trend for quite a while now. Cardano's been bucking the trend. It was me. I'm the fourth call. Ah, yes. Yeah, but you're not panicking. That's funny though. So the Cardano is at $1.34. It's kind of bucking the trend. And why? Well, smart contracts are coming. Let's see. After a few years, let me see. Dan, what's going on, Dan? Says effing good day. After a few years, my uncle, who's the closest person to me, decides he will buy a ledger and dive into crypto, starting with buying Ethereum. Okay. Dan, can you explain to him that there are other protocol layer assets? You know what? No, don't do any of that. Dan, have him read the Bitcoin white paper. Just have him do that. I think that would be a fair win. Tiffany, good to see you. London fork will affect price action. It's hard to say. Listen, we'll probably go a little bit deeper into what the London fork really means. It doesn't mean that much. It could psychologically mean something. It just doesn't mean that much. And remember, Ethereum, well, maybe not remember if you're first learning about this. Ethereum is firing their whole mining community. Do you think that the mining community that is currently supporting Ethereum is happy about all of them being fired? I don't know. My guess is no. You think they like the prospect of going and mining Ethereum Classic or whatever's the next closest derivative with their mining rigs? No, probably not. They just got booted out of China. Everybody got booted out of China. Thank God, by the way. China's dead. China's a non-issue. It's great to think we never have to talk about China ever again as far as Bitcoin is related. However, could they go and take some further steps? Could they say Bitcoin is illegal? Sure. They could say every crypto is illegal except their digital currency for electronic payments. And I imagine they will. And no one will care because China lost their foot in the game. I believe what they did when they booted all the miners out as quick as they did, I think they made a huge game theoretical mistake. That being said, no, we don't want to be famous, bro. And you know what? These are fake accounts because you can't even boot them. No news of Mark Cuban ever since the rug pull. Yeah, God. Iron Finance. Anything Mark Cuban's involved in, steer clear, bro. Just go the other direction. That guy is a walking fail bomb, right? He is a, what did we say? He's a 503 gateway error. That is Mark Cuban. Okay, let us continue. So Ethereum's getting beat up a little bit, but it's up 10% on the week. So we're not hurting. Cardano, let's look at the other protocol layer assets, up 24% on the week. The biggest bounce back by far has been the Polkadot. It's down a little bit today, but so what? Everything's down a little bit and it's tracking. Look, Bitcoin's down 4, Ethereum 5.5. The only one bucking that trend of the protocols that we like, well, that is the Cardano. Why? Smart contracts are coming. Big things are coming for Cardano. I wouldn't be betting against it. Okay, Matic down 4. So everything. So basically, I always look at Bitcoin. I say if Bitcoin's down 4%, then 4% is zero. 4% is like nominals, is like real zero, right? And so to get our real rates, our real prices, VChain's faring better than Bitcoin, Filecoin faring better than Bitcoin, but we're pretty much across the board down about 4%. Some more, some less. Nexo, down 6 and change, but it's up 2, so they're having a pretty good week. Flow, $20. Thankfully, it started melting back up. OGN, who cares? Telcoin, not very exciting. I did meet one of the guys over at Graph over the weekend. He was at that party. He didn't strike me as being terribly sharp. So I don't know. I don't know what to tell you. It made me less excited about my position in Graph Token. You know, if he's the public face and he's not dumb. He's not a dumb guy. He just didn't, sometimes you leave the room and you're like, that guy or that girl or that undisclosed pronoun, that person is sharp. I did not get that from this guy. And that's worrying. So yeah. Rune bouncing back pretty good, up 6.8 on the day, 72% on the week. So if you bought the beating they took, then you got paid. AR token is just about in my buying range again. If it gets under 10, I think it's worth buying. 1 inch, right around Bitcoin drop, pretty flat. I think the staking on 1 inch right now is 6%, 6 and change. So good for 1 inch. Fetch, it's down 6%, but it's up 13 on the week, almost 40% on the month. If you started going into Fetch, listen, the mainnet swap thing, the mainnet transition is coming. A couple of other notes. So Fetch staking is going to get very exciting. So is Render is working on their staking. They're up 8% today, of course, because Render. NKN keeps melting up, so that's good, even though it hasn't really done much of anything, but it's up. Up is better than not up. SDAO, so Singularity DAO, they're working on their new staking mechanism. That's going to be sorted out pretty soon. We have Matrix AI. No one cares. It's down. It's down. It's down. And let's face it. It's a scammy lottery ticket, and you buy it because you think it might go to 4 or 5 cents, and then you immediately sell it because it's an absolute dumpster. All right, and AGIX. AGIX is quiet. It's low. It's interesting to me because I still think the smartest guy in the human world zone is Dr. Ben Gortzel. Listened to a really interesting speech. I was going to put it was a TED Talk he did a couple years ago. So 2020, end of 2019. It's a really interesting TED Talk. It broke down the AI space in about 16 minutes. It's a really good talk. So I'll try to post that in the Telegram later. Okay. Yeah. So that's all we got as far as the coins that kind of interest us. Let's see. Patrick says, was in town for a Mine and Disrupt conference. Interesting city, but long way to go before it's crypto land. Yeah. I don't know, man. Everything on that coast, look, they either have bull sharks or they have storms that tear everything down or your condo collapses. Who's comfortable about buying a condo in Miami right now? Anyone? You better have a hard hat. You better have a Faraday. You better live in an iron encased Faraday cage that will protect from the whole world collapsing on top of you. No thanks. No thanks. Let's see. Tiffany says, from my understanding, none of the exchanges in Japan have ever directly listed ADA, and Japan is one of the largest holders of ADA. I remember Charles talking about trying to get it into Japan. Okay, I don't think Japan's that important, and I don't mean that in a bad way. I have some really good, close, family friends that live in Osaka. One of my best friends lives in Osaka, as a matter of fact, and so I'm not anti-Japan. I have 2 actual katana that came out of Japan. How'd they get out? I didn't smuggle them out. Someone else might have or might not have, because you're not allowed to take the originals out of Japan. But all that is to say, as far as crypto land, Japan doesn't move the needle. You know who moves the needle? Africa. So I get it. Cool. Japan. But it's kind of like a side order of who cares. So don't get too caught up in Japan because it doesn't mean too much. Let's see. Dab Life 420. I'm in Naples, Florida. We're just talking about that last night. I don't think I would buy one until research. Man, even then. Look, that was a building that they were working on. Poof. And I like how it's like 156 people missing. Man, they're not missing. They're under the rubble. I guarantee you have a thermal imaging camera. You know where everybody is and isn't ever coming back to life. You want to talk to them? Talk to them with a Ouija board. All right. Okay, so let's kind of switch gears here for a bit. We are going to talk about cognitive bias, but before we talk about that, let us go look first. Draper University partners with Algorand and Borderless Capital too. Who cares? Tim Draper is not as interesting as I thought. Partnerships, Robinhood potentially partnering with Uniswap. It's a maybe. I don't know if Uniswap is going to risk. Ooh, that's risky for Uniswap to get looped into Robinhood. Robinhood is incredibly dangerous. And the article we're going to talk about is about gambling and the fact that Robinhood openly promotes it, and that, politicians, they're not super supportive of big gambling initiative. So we're gonna talk about that a little bit. What's going on the Vortex scoreboard? So for all of you home gamers, Vortex, don't worry, I'll spend the money on the membership so that you don't have to. The first thing we've seen in the 90s lately, so we saw Telcoin early last week. I think for a few seconds it was over 90. Voyager token popped up. It's having a big day. It's up 24%. Quite a nice day. So that's Voyager token. The next closest is Coin, which is an absolute dumpster. Coin is also distributed data, similar to kind of like a not good version of Filecoin. I actually originally owned some Coin. I think I owned it at 3 cents. What a waste. Anyway, whatever. They have mining rigs. They've had to fork their network over and over to kind of fight against the powers at Bitmain. Who knows how long Bitmain's going to be. I don't know. Bitmain is kind of the de facto supplier of mining rigs and equipment for the world, but they're in China. It's going to be interesting to see. I mean, hopefully the powers that be in China realize the value of controlling all of the mining equipment for the whole Bitcoin network. Hopefully that resonates with someone. I want to believe that China makes good game theoretical decisions, but right now they're letting us down. They're letting us down. Anyway, so there we go. StormX. I hope StormX keeps creeping. So it's at a 79. It's at 2 cents. It's tiny market cap. Look at these. Do you see anything over $1 billion here? Look at these market caps. When you see stuff under 100 million market cap, of course, it's easy to move. 3 or 4 of us could move the token. But yeah. Voyager, man, Voyager's got a lot of money. Scott says, my team's been recruiting software engineers for Voyager. They are absolutely buried in cash. That's great. So we'll see. I like it. I don't have a position in it. I probably wouldn't take a position in it. Although, based on the Vortex score, I would have to look and see. We can look and see when it happened. This is what you do. So this is when I make a decision. I say, when did it break into the 90s and have I missed it? And it looks like it broke into the 90s early this morning. And at that time, the price was 316. It got up to 338. It's now back down. It's 314. And then I would look at mean reversion. So I would say, okay, if it mean reverted, which all things do, because this is basically your average price, and you could just draw an imaginary line, 250. I don't know, man. I don't. We're at 304, 250. If you like this, if you're super motivated, maybe you try to buy this somewhere in the neighborhood of 280 to 275, 280. But you know, the Cointelegraph Pro has been the gift that keeps on giving. So I will say this, almost always these things continue to rise. My guess is this thing probably sees 350 before it sees 250. So there you go. Well, yeah, your friend is a Voyager whale. Well, if he's a Voyager whale, then he's not going to have the best perspective because he's incentivized, right? He has rather perverse incentives to spread the gospel. So Dab Life, I don't know if I would leverage his opinion. Because he's in for 30x. So just be careful. They listed on Canadian Stock Exchange and will be listed on the NASDAQ very soon. Right. Which typically has been bad for companies. Remember, that's typically bad for companies. So be very careful. When things list on stock exchanges, all sorts of rules, dubious regulations come into play. And again, I know you like it, Dab Life. I know you love I get it. The coin has utility, but is it going to get use, utility, and widespread adoption? There's lots of projects that look good and that sound good, and you can frame an argument. But if you extend out into the future, 18 months out into the future, that's kind of like the theme today. Let's look 18 months into the future. In 18 months, is Voyager the answer to a big problem? Is it? Has anybody said, man, I can't wait until a year and a half from now when Voyager does what they're going to do with their little wallet and all this kind of, no. No one has ever said that. No one's ever said that sentence. So is it solving a problem that may exist right now that might not exist in 18 months? That's my, and I'm not saying one way or the other. I'm not telling anybody not to like it or whatever. Do your own research. But these are the kind of questions you need to ask. Is this project going to meaningfully change the landscape in the next 12 to 18 months? My gut so far on Voyager is no. But does that mean the token won't rise up in price and do all this kind of stuff? Yeah. I mean, did Dogecoin meaningfully change the landscape? No. It brought a bunch of rubes into the market and it cleaned their clocks. Right? It brought a bunch of idiots to the market. But what's the fallout? Some people stayed. Some people stayed in the market. That's a good thing. So that's kind of an extrinsic positive, right? An external positive. We're going to be talking about external positives and external negatives. So that's kind of cool. I would rather own Nexo. Yeah, me too. Because Nexo is an institution. And unlike BlockFi, regulators seem to be okay with it, which gives me a little warm, fuzzy feeling at night. So there we go. So remember, it isn't just that something has utility, Dab Life. Something has to have not only use, not only utility, but also the potential to reach wide-scale adoption. And if it can't, it can't. I don't know what to tell you. And there's a lot of projects I get. You don't know how many people hit me up. They email me. They say, oh, you need to have us on the show. Not like we have like a million people that watch the show, but have us on the show and let's talk and just ask us all the really hard questions. I said, send me the white paper. I look at the white paper. If I read 10 pages into your 18-page white paper and it's just full of buzzwords and stupid crap, I'm going to tell you, it's just full of buzzwords and stupid crap. I don't think this thing will have enough use and utility to reach widespread adoption. And then I usually get like, well, you don't understand it. That's why you need to have us on. Bro, if I can read your white paper and that's not enough, what else is there? You gave me an 18-page white paper. It sucks, bro. It sucks. I don't know what to tell you. Jerry says, Voyager's in a space. By the way, anybody that didn't check out Jerry's show Friday night, go back and check it out. It was fun. It was Jerry. It was Jungle Inc., who I hope to be on with both of those guys again. And it was myself, and we had a little fun. We played devil's advocate back and forth. It was really cool. Jungle's a great guy. It was kind of glitchy. His connection was a little bit glitchy, so that was kind of hard. But otherwise, it was a really great show. So The Jer says Voyager's in a space with stiff competition. Their value will be derived from growing its network. They will grow faster and larger than Nexo, Abba, Celsius. Oh, will they grow? Yeah. That's the question, right? And the answer might be yes. Maybe you can money that problem, but I don't know. I don't think Voyager can outmoney. They can't outmoney Celsius because Alex will cut the check. Alex has a lot of money that he will throw at it because for him, it's a demeasuring contest. So yeah. Simon, good to see you. Did you get rid of the body? That's funny. I think, okay. Dab Life says, I think I wouldn't go chasing. I think there's better opportunities, but as someone who uses their exchange, I believe their Voyager loyalty program, I think it can be beneficial long-term. They just linked with Coinify, from my understanding, which will expand them globally. Right. But who uses Coinify? Right. It's like when you saw all these dubious connections that Link was making. Link just partnered with so-and-so. They partner with so-and-so. But it's like so-and-so, so what? That was the problem. And so I would just say, be careful. It's easy to chase. Now, I will say this, to its credit. Uh-oh. Did it just drop out of the, oh, no, okay, 93. Yeah, to its credit, the Vortex score takes a lot of things into consideration, a lot of factors. And just to reiterate, it compares coin's current sentiment, Twitter activity, trading volume, price movement, and the entire history of that asset, all the way back to day one. A higher score suggests that current market conditions have historically been more bullish for a coin within 24 hours. The way I play it is anything plus 9, if it's a 90 or better, if I'm going to play the asset, if I believe in it, because you still have to believe in the asset. Don't just blindly throw money at it. But if I believe in the asset and it's a 90 or better, I will buy it and I will hold it for either a 25% gain or 7 days. At the end of that time, or if I get my 25%, I sell my original position back out and I keep the profit, and that's my free position, and I let it run. Well, minus the tax burden, obviously. So, yeah, that's how I would play it. Is the next one in line? Look, if I'm comparing Voyager and Sia Coin, no comparison. Sia Coin's a dumpster. Teller, who knows what that is? 75 million. Jerry and I could buy that company. Linear, I don't know enough about it, so I'm not going to rule on it. It's kind of a small market cap. StormX, I own StormX. It's not delivered the way I had hoped it would, but you never know. So there we go. Somebody is really. Let's see. Voyager has a good business with a nice future, but temper expectations because the space is crowded and new players are entering legacy business. Yeah, you guys realize that every one of these private institutions is either going to get bought, crushed, gutted, regulated into subservience of some point or obsolescence, and the banks are going to take over. When you guys hear about, BNY Mellon and State Street, Chase, Bank of America, do you think that they're going to play on an even playing field with Voyager, Nexo, Celsius? No. Regulators are going to come in. They're going to take care of their homies the way it always works, and they're going to crush these dudes. It is what it is. The best hope we have is to make currency units right now while we're in the Wild West and the market doesn't understand these arbitrage opportunities, and the big players haven't come in to beat up these lenders. These lenders are going away. Who might survive? The lenders that that pony up with exchanges. So if we see a future where Coinbase, which they're getting into lending, they become a lender. Okay. If Nexo can become more of an exchange and compete on a meaningful level. Okay. But my guess is anybody that doesn't have that kind of relationship, they don't stand a chance. When the arbitrage looks good enough, when the market is tasty enough for the big facilities to come in, and again, the biggest, BNY Mellon, is laying the groundwork right now. They're pouring the concrete. They are coming. They're going to end all these projects. They'll either eat them up, buy them for their, it's the same way gyms do, right? LA Fitness buys all these other gyms. and they lock the door and they just point all the members to their other LA Fitness. They say, go 6 blocks down the street and go work out at LA Fitness. Why? They just want the membership base. So you're going to start seeing a lot of acquisitions just for the membership base, just for the participants, just for the roll sheet. They won't care much about Voyager's assets. They won't care much about Nexo's assets. Celsius, he can probably stay private, but his rates are going to have to come way down. Same thing, Nexo is doing it too. You're starting to see these rates march down. And we, not just me, not just Jerry, but all of us in the space, and many of you have been talking about this, these rates that pay higher than junk debt, than high yield, cannot exist. They can't. They too will be arbitrated into obsolescence, or again, subservience. They might take on these assets. So if I'm betting against, if I'm saying who's going to win, Voyager, Nexo, Celsius, or BNY Mellon, Chase, Wells Fargo, State Street, it's laughable to say that in the same sentence. It's laughable. So let's not forget that we're part of a bigger story. The slow transition of the legacy financial system using digital products to alleviate frictions. And if you realize that, and you don't think they don't have to come to us. The whole crypto space is a freaking rounding error in the legacy financial system. It's dust. So they will come and take what they want. They will cherry pick what they want, and they will regulate the rest into bankruptcy, right? It is what it is. Let's see. Jerry says, in the oil boom, one company lowered its cost until they put all the little guys out of business. Yeah. So you have loss leaders and you have moated business strategies. Look at what SoftBank does. If you want to understand that strategy, they'll go in, they'll take a company, and they'll run it they'll run it at a loss, like they did with Tesla, like they did with WeWork, like they just go on down the list of just about everything SoftBank has done. They find a business they believe is a moated Uber, and they run it at a loss until they run everyone else out of business, or at least that's the goal. And then the business is moated. It's tough for anyone else to compete because they got so much market share, and then they can melt the prices back up to whatever they want, right? To the point where the marginal customer says no. So, keep that in mind. Okay. Yeah. Standard Oil, Rockefeller, Yipper. Yeah, there's no way to know, right? Like, yeah, they could definitely acquire communities. There are no rules, right? The only rule in business is don't get caught. It's not don't break the rules, it's don't get caught. Then have good lawyers. That's like rule number 2. Okay, let's switch gears. That's not really switching gears. Let's talk a little bit about the Robin Hood. We didn't get a chance to speak about the Robin Hood. Let's talk about the Robin Hood. Oh, there's nothing great to say about Robin Hood, right? I want to go through this. So I want everybody sit back and relax. I think we probably need conspiracy music for this. I think that's where we should be. So sit back and relax a little bit, and let me just read this off to you. And I'm going to even take my fat head out of the picture. There we go. So sit back, kind of relax. Let me go through this because it's important that you hear this. Not that you just saw the headline, but you need to hear this because there's some psychological underpinnings to the way that Robinhood is preying on people. And they are actively preying on uneducated Joe 6-pack, Joe 5-pack, who doesn't know that there's a 6-pack. And it's kind of nasty. And there's just a lot of reasons not to like anything that Robinhood does. And there's a few reasons to like them. But in my opinion, what doesn't matter my opinion. You make your own opinion. Let's talk about it. Preying on human weakness, why investors are nervous about Robinhood. Regulatory fears have been a major headwind for Robinhood's IPO. Here's why authorities might crack down. And this is by David Morris. This is a good article. I've read a few things from David Morris. His name's popping up more and more. I have to kudos him. I don't agree with everything he says, but I give him kudos because it's a well-structured discussion, and I like that. And I don't have to agree with someone to appreciate their arguments. Yeah, you said it, Land Deals. They are definitely marketing. They're marketing to children that don't have the tools. They don't have critical thinking skills, right? So Robinhood Market's initial public offering has been a mixed bag so far. The stock crashed hard after its debut Thursday. This is last Thursday, losing 8.4% within hours of listing, the worst performance ever for an IPO of its size. I want you to put that in the back of your mind. The worst performer ever. I want you to put this in the back of your mind too. And I don't know if he talks about this. One has to wonder if Robinhood is printing cash the way that they had claimed to. Why are they going to the public markets? You go to the public market when you need cash to expand or when you're in trouble, perhaps. And was Robinhood in trouble within the last 6 months? Yeah. Should regulators have even let them go public? I would say no. I don't think this company should have been allowed to go public. They're embroiled in legal disputes and lawsuits, class action lawsuits, and other. These guys, they're in worse trouble than Ripple, right? I mean, ugh. Anyway, I digress. Let's continue. The worst performance ever for an IPO of its size. The Financial Times identified concerns about regulation and the fragility of the pandemic day trading frenzy as headwinds for the stock. Yeah, no S. There may have been transitory swoon though. The stock bounced back Friday, and Cathie Wood's ARK, a clear leader of the growth investing pack, has been buying. As I've written here before, I find Robinhood long-term compelling as an investment, given a broad and continuing rise in mainstream investing, speculation, and meme stocks. And while we can all be frustrated about the whole meme stock thing, it is the world that we live in now. You can either be frustrated and sit on the sidelines, sit on your hands, or you can just factor it in as a part of the information, part of your data, and weigh it accordingly. There is a certain compliant group of rubes that will buy meme stocks, and they will always buy these things until there's no more money left. Luckily, we have an ever-expanding wealth divide, and pretty soon there'll be no money left for the rubes to use. Is that good? I don't know if that's good. Okay. That it looks like a good business, though, doesn't mean it's good for society. Critics, including Scott Galloway, a professor at New York's University Stern of Business, have accused Robinhood of being, in essence, a form of legalized gambling. Oh, it's definitely a form of legalized gambling. Galloway wrote last week that the company preys on human weakness, in particular, young men's susceptibility to gambling addiction. Every one of us here that's seen the rubes that we've seen talking about trading that Doge, you know exactly what he is talking about. So on this one, Mr. Galloway, I give you a thumbs up. The critique is based on Robinhood's dependence on active trading for revenue. Remember, they don't promote investing. They promote trading. Do they talk to anyone about tax ramifications? No. No, they just give you little confetti and stupid crap like that every time you make a trade. Woo! Like you're playing Pokemon, like you just caught a Charmander. So the critique is based on Robinhood's dependence on active trading for revenue, even if that isn't a good investing strategy overall, in its use of social dynamics and gamification to keep users hooked. Part of the risk of a hood, it's called hood. I mean, think about that for a second. Ugh. Part of the risk of hood position is that regulators will eventually reach the same conclusion and impose restrictions on the business, just as they have with gambling proper. Do you guys know how many stocks out there like support like those online poker networks and things like that? There's not many. There's not many NASDAQ listed assets or NYSE assets that are pure gambling plays. And Robinhood is pretty much a pure gambling play. So, be very careful. To get a better sense of how regulators might scrutinize Robinhood, then it's worth looking directly at the logic behind gambling regulation. A lot of B's, a lot of M's. Haven't had a lot of coffee today. Freedom isn't free, especially if you're unlucky. Gambling through Robinhood is legal, of course, because underneath it are stocks instead of a roulette wheel or, imaginary cards. But to take a step back, why does Galloway regard gambling as such to be a problem? Gambling is, after all, legal in many forms in about 20 U.S. states, and 45 states have official lotteries. because they like that tax money, which, by the way, lotteries are a poor person tax. I don't think anyone could argue against that vehemently. For the majority of people, games like poker, roulette, and slot machines are just good fun. Now, I'm gonna say this: poker to me is a skill game. It's not flipping pennies. It's not roulette. And it's certainly not slot and fruit machines. So I think it's unfair for him to loop poker in there, but he could certainly put blackjack in there. Anyway, for the vast majority of people, games like blackjack, roulette, and slot machines are just good fun. So I don't know if it's good fun if you lose your rent check. And gambling for money has been a part of human society for thousands of years. Yeah, so has murder and thievery, but that doesn't make them good. Most gamblers set budgets. Their budget is what they got in their pocket. And investing parlance, bet only what they can afford to lose. Sure, sounds good. That's the argument you use to regulators. That's not what the truth has been, though. All right? There's some pretty startling facts as I get to them, and that's why I had to read. You're going to love this. Anyway, the decision to legalize gambling is often a painstaking attempt to balance added revenue and personal freedom with some serious and well-known harms. Yeah, no S. Gambling has addictive properties, and a small portion of gamblers develop problem gambling behaviors comparable to drug or other addictions. The North American Foundation for Gambling Addiction, let me see, that would be NAFGA. NAFGA estimates that about 2.6 of the U.S. population, nearly 9 million people, have experienced life harm related to gambling behavior. One reason lotteries are more widespread is that they may contribute less to problem gambling behaviors while capturing revenue for the public sector. So in allowing lotteries, they basically say on the aggregate, on balance, more good than harm. We build more roads than people ruining their lives, right? It's not likely that people take their whole paycheck and go buy lottery tickets. I'm sure some do, but most don't, right? Whereas you go to the casino table, there's a good chance you're going to hit that ATM until it's dry. Those behaviors don't just harm the problem gamblers themselves. Much like drug addicts, problem gamblers are more prone to behaviors like theft, fraud, domestic violence, and unmanageable debt. A 1996 study found that the average problem gambler cost their employer, and this is in 1996, push that to now, it's about 4 times that. So we'll call that $6,000 a month in lost labor. Think about that. If you pay someone $72,000 a year and they gamble and they're a problem gambler, that means it's a break even. You've paid them twice. You're actually paying them $144,000 because you paid them $72K and they burn $72K in lost labor. So you're actually paying them, oh God, you're just lighting money on fire because they're taking up space. Overall, the same study concluded that the cost of problem gambling in lost productivity, bad debt, criminal justice proceedings, and the like totaled, and this is 1996, $307 million annually. So let's put that at about $1.2 billion now. And that's, give me 2 seconds. Yes. Okay, keep that. Okay, I have to let in my painters. Hopefully that did it. Okay, sorry. We're painting the ceilings. I'll do a walkthrough maybe Thursday of the new place, but until it's ready, it's not ready. All right. The same study concluded the problem of the cost of problem gambling and lost productivity, bad debt, criminal justice proceedings, and the like totaled $307 million. We'll call that $1.2 billion annually for the state of Wisconsin. That's one state, and that's Wisconsin. I want you guys to think, do you think Wisconsin is on the low end of gamblers or the high end? Truth is, I don't really know. Let's call it an aggregate, meaning there's 50 states. So this number could be, 50, 60 billion a year. Poof, gone. That amounted to 42% of the revenue generated by gambling operations, leaving just $188 million in annual net benefit to the state after gambling. So that's basically saying, listen, if you have gamblers and you allow gambling, you're going to give half of that budget back. Half of the money derived from gambling in your state through taxes and proceeds is going to go back to dealing with the bad debt, the criminal justice proceedings, the theft, the fraud, the domestic abuse, murder, go down the list. God. And that's how we weigh things. Why? Because corporate structures are psychopaths. They have to be. God. Anyway, but neither the cost nor the benefits are evenly distributed. Not surprisingly, the 2.6% of gamblers who have a problem generate a disproportionate amount of gambling revenue, between 5 and 15% of casino, lottery, and sports betting revenue, according to research conducted by the University of Chicago. That means a large portion of casino and gambling profits are extracted from individuals who aren't making careful decisions about their risk. Similar trade-offs are also true of cryptocurrency. This is true. This place has become a gambler's haven. Similar trade-offs are also true of cryptocurrency. A relative lack of regulation has created both huge new innovations and opportunities for for most savvy investors, and a high level of fraud or bad ideas that are more likely to harm novices, right? Because new entrants to the crypto space don't have the tools to wade through the nonsense. They just say, coin go up, I'm going to buy it. I'm going to get rich. What does it do? I don't know. What's it called? Fruit swap. Oh, sweet. I'll take all of it, and I'm going to go into debt and buy more. Novices get punished, right? And they're also the most arrogant. Anyway, legislators worldwide are clearly still searching for what they think is the right regulatory balance of both risk and benefit. Fixing market failures. So while gambling may be a net positive for businesses and societies, those least able to control its addictive impacts bear a huge negative burden. So we're going to talk about negative external factors. And though we're years away from definitive research, there's every reason to assume that Robinhood's revenue also relies on high-risk behaviors of a few users. Yes, this is to some extent inherent to day trading, which produces the same sudden, unpredictable jolts of pleasure that make gambling addictive. Robinhood generates more than half of its revenue from options trading, arguably the riskiest offering of the platform. Why? Because as we all know, 90% of options expire worthless. So Robinhood promotes and generates half its revenue from assets, time expiring assets, where 90% are losing bets. The company is also clearly trying to encourage heavy users through gamification by showing confetti and other splashy notifications that parallel the garish distractions of a slot machine. Both are designed to keep players playing and seem likely to have the greatest impact on those users most susceptible to problem behavior. It's like those idiots in a crowd that are easy, the guy up on stage can hypnotize them. Oh, you act like a fish, get the F out of here. But you know what? Some people act like a fish because they are so overly compliant that they are want to be hypnotized. They are want to be convinced. They are the compliant rubes that make up the 100 and below IQ. And unfortunately, they now have access to light all their money on fire the same way the rest of us do, even though the rest of us may have 10, 20, years of exposure to financial products, to investing and things like that. So look, if you can't even read a balance sheet, if you don't know like income, expenses, liabilities, assets, cash flow, dear God, you have no effing business being in the crypto space. And you really have no effing business being in the investment space. And that's not a, have all versus have nothing type argument. That's a common sense, you need some financial IQ, a breakdown of the educational system argument. There we go. And heroin addicts make up a large portion of heroin dealers' revenue. So true, Jerry. It's also worrying that 43% of Robinhood's users have bad credit. Let's think about that for a second. 43% of Robinhood users have bad credit, suggesting they're either already bad at managing risk or don't have enough disposable income that they can afford to lose it. Evidence of impacts here are still anecdotal, but it's not hard to find stories online of novice traders losing all their money on Robinhood. Remember the guy that was in the options market and Robinhood showed that he owed a bunch of money? And so he committed suicide. And they were like, oh, yeah, that was a mistake. We just put the screen was wrong. Oh, cool. Well, it's a good thing you educated everyone. And that guy probably didn't deserve to live anyway. I mean, he did imaginarily lose all that money. He was a failure. That suggests that the social costs of Robinhood, like those caused by gambling, aren't fully captured in the direct cost to users, what economists call a negative externality. Another classic example is pollution, because the price of something like a car doesn't naturally capture the harms of dumping its byproducts into the atmosphere. That there's also examples of the tragedy of the commons. So and by the way, there are positive externalities, right? So while gambling has a negative externality, positive externality like education, for instance, it produces social benefits well beyond what accrues directly to the user, meaning education will be underproduced in a pure laissez-faire market. Interesting, right? So I will just finish this out. Crucially, Robinhood may have its own positive externalities. The trading app really does seem to have democratized finance. I think it's democratized gambling with the assumption that the gamblers are in finance, which allows them to rationalize and justify their gambling behavior. So I'm going to disagree with him on this one. It attracts a younger and more diverse customer base than traditional brokerages, thanks to its marketing and lower barriers to entry. True. The problem is the reason its marketing and lower barriers to entry exist is because you are the product, which is kind of sketch. Anyway, they also use preferred market makers so they can pad their pockets. There's a lot of bad behavior around Robinhood. I don't know how this thing IPO'd. Anyway, there's a benefit to society more broadly through both expanded wealth creation and more narrowly because it helps drive more accurate price discovery of stocks. Yes, that may sound like an insane thing to claim in the wake of huge bubbles in GME, AMC, and I would also throw in Hertz, Ford. Let's go down the list. And even really Tesla, if we're being honest. But in the long run, it's inevitably true. See, I don't know that in the long run it is true. There are certain economic, educational, psychological divides that contribute to a wealth divide. It's not so simple as just give everybody a seat at the table and everything will be fine. Markets are generally very good technology for price discovery. I agree with that. That's what they're for, but they're not perfect. And modern governments generally see it as a roll correct market failure. The US and other governments have almost uniformly stepped in to correct the market's inability to price pollution, for instance, and to support the production of education. Okay, great. So he thinks in the years to come, this is a good play. I'm not sure in the years to come, this thing even exists, at least in its current form. And I think when people weigh on balance, they weigh the benefits versus the detriment. I don't know if Robinhood makes sense. To me, Robinhood becomes something off to the side. I know they're going to try to go into crypto. I know they're going to try to do all these kind of other things. But my guess is your average, somewhat veteran crypto trader, let's say 6 months or better, looks at Robinhood and says, you guys are a joke. I'm not giving you a penny ever. Like, period. Knowing what we know about Robinhood right now, would you put a penny in Robinhood ever? I wouldn't, but that's me. Maybe I am not the average person. Okay, cool. Let's go and let's do a cognitive bias because that's what we do. So let me stop. Let me share. Let me find it. Yes. What are we working on today? Our bias is the survivorship bias. What? Let's talk about it. The survivorship bias. This is a logical error concentrating on the people or things that have survived some process and inadvertently overlooking those that did not because of their lack of visibility. This bias most often occurs to people who systematically overestimate their chances of success, especially in business. So that's a lot of gobbledygook. Let me break it down. Example, companies have gone bankrupt or no longer exist are excluded from the analysis of financial performance, meaning that you're looking at the performance of a bunch of companies that survived, not the ones that died, even though that information is probably important and germane to the conversation. And this is an easy one. This is a little one. How to avoid. Periodically reviewing once promising careers, projects, investments. Look at the coins that failed. Look at the token projects that blew up. Look at the Ponzi schemes and the way they were made up. Look at the wallets. For those of you that are on the Voyager train, look at the wallets that didn't make it. Look at the projects that failed. Okay? Careers, projects, investments, coins, and goals. And you can, then you have all the information. Then you're weighting correctly. Don't just look at the winners and go, okay, cool. Can this guy be a winner? Well, let's look at the losers too. You can't just study the winners. Cool? Wasn't that an easy one? I feel like we nailed that. I feel like we did real good. Anyway, let's call it a day. Stay out of trouble. Tomorrow I'm doing office hours for Money Map Press, but I will get that recording and I will throw it on the Twitter. So for anybody that is not either in our group on Telegram, let me see. I think I have a card for that. Where is the Telegram card? It is right. I really should have that like at the top, right? Like that should be like one of the easy things to get to. Well, here's the Twitter and the Telegram group. I know I did a card for that unless I had to kill it. Here it is. Boop. Okay, so if you need to email me, cryptoandcoffeelive@gmail.com. If you want to join our Telegram group, which we post stuff in there all the time, there's always a good little conversation going. t.me/cryptoincoffee. Cool. Stay out of trouble. Don't do drugs. Stay in school. Don't do anything my poor insolvent drunk strung out of meth grandmother wouldn't do. You know what? Luckily, she's not smoking water today. She was freebasing Clearasil. I said, what do you get out of that? She goes, it's not real Clearasil. It's heroin. I was like, oh. I was like, wow, Clearasil, right? Like makes your face better. She's like, don't be stupid. I'm like, oh, God. All right, Grandma. I'm out.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet. Hey, you talking to the Prophet.
It's all fake news. It's phony stuff. It didn't happen.